The stock market is up and down depending on the news of the day. So what's an investor to do? I asked that very question to Thomas Hayes, chairman and managing member of Great Hill Capital. And I want to let the viewers know ahead of time that I'm not going to try to deal with what happens on a particular day, because we're taping this on Wednesday and anything could happen on Thursday and Friday. And I guess that's the point, that anything's been happening day after day after day after day, depending on COVID-19 and the reopening of America. And when there's good news like an infusion, the stock market seems to take off. When there's bad news like a spike, the stock market drops down. How is the average investor supposed to navigate those waters?
Well, Larry, thanks for having me back. You remember a couple months ago when I was on, the world was in disarray and people were very nervous. As a matter of fact, looking at the statistics that came out, unfortunately, 1 in 5 people sold 100% of their equity positions during the low in March. If you look at age-wise, if you go up to about 60, 65 years old, almost a third of those people sold all of their equity positions. And that is certainly not the course that you want to follow, as we covered last time, is to stick to the long-term course, because betting on the future of America is always a constructive thing to do. You know, just today, and this will qualify for the whole week, the IMF took down their growth expectations for the world from -3% to -4.9%. And they took down US GDP for this year from -6% to -8%. Now, the IMF is not the place.
Let's stop there for a second. Just
Yes.
explain to people what that means.
Effectively, what that means is that they're more pessimistic than they were. So they're saying that we're going to contract in growth. And the IMF is generally not a place you want to go for a dinner party, because they have a history and a pattern of being overly pessimistic all the time. So usually about the time they get the most negative is the time that you want to actually take the other side. And that's not a commentary. It's just normal. When the data is looking a little bit worse, it's often near an inflection point. I mean, look at new home sales this week, up 16.6%. Retail sales we saw up 17.7%. So the data continues to improve. We went from -20 million jobs to plus 2.5 million jobs. And really the difference, Larry, is that this time global government policy is ahead of the curve, particularly in the United States. You know, they saw things were going to crash. They saw the plate was going to fall off the table. And rather than wait for it to break into 1,000 pieces like they did in 2008 and 2009, and it took years to recover, they said, let's put a trampoline down so this way we can cushion the blow and recover very, very quickly. And that's exactly what's happening right now.
You keep hearing the word recession, and it does seem like we're going to be heading into a recession. But there's two trains of thought on it. Is it a U-shaped recession or a V-shaped recession? Explain what that means and what you think is going to happen.
Yeah, well, you're seeing a consensus that it's going to take longer than expected. As a matter of fact, in the Bank of America Global Fund Manager Survey, which surveys about 200 managers that manage $500 billion of assets, the level of pessimism, which is a contrary buy indicator, by the way, only 18% of these managers expect a V-shaped recovery. And that's after a 40% bounce off the bottom. So ordinarily, when you—
For a second, a V-shaped recovery would mean, and it's obvious, right, that it just bounces right back. That it comes back quickly.
Exactly. So, you know, to your question, Larry, about a recession, you know, we've already had it. So by the time they actually declare you're in a recession, the market is already discounting the recovery. And what is the technical definition of a recession? Is 2 consecutive quarters of negative growth. We had it in Q1. We're certainly going to have it. We'll see it in the next week or so for Q2. And by that time, everyone's going to be talking recession, except for the fact that the data is now picking up. So that's in the rear view mirror. And what we want to be looking is in the through the windshield at what's happening next. And what's happening next is, you know, the Federal Reserve did a consensus of its members about a week ago, and they're looking at, for 2021, plus 5% GDP growth. And I think that might be a little bit conservative when you consider, 40-50% of 1 year's GDP is now in stimulus aid and liquidity. 5% could be very, very conservative as we get the virus under control.
Could that be affected by the presidential election? And try to be as objective as possible. I'm sure you're going to be, just as a money manager, just as somebody that's in the stock market.
Yeah.
How could the presidential election affect next year?
Yeah, well, you hit the nail on the head. In addition to the IMF data, the market is a little bit concerned. This is perceived as a business-friendly and tax-friendly administration. So the stock market and the market participants, as it relates to impact on earnings and impact on growth, looks at this administration in a positive light. And I think that's in all generic polls around. People generally think that the administration is good for business and for the economy. For other things, that's up to the different polls. So as those poll numbers come in and they're a bit dicey for the administration in current numbers, the market starts to discount that, because if a new administration came in, likely you'd see a bit higher taxes, which would have an impact on earnings, and earnings is the whole key to the valuation of the stock market.
All right, Thomas, thank you so much for your time. You're always great. I appreciate it.
Thanks for having me, Larry.
That was Thomas Hayes, chairman and managing member at Great Hill Capital. When we come back, a heartwarming story about a community that comes together to make life a lot better for 3 orphan boys. That's when Jersey Matters comes right back.